Good morning, all my friends in the YouTube nation. We are live. Give me a thumbs up if you're in here and let me know if you can hear me. Test, test. Test, test. I got ads. God knows I'm not getting paid for them. Give me a second to make sure my audio is coming through, and then we'll jump in. We got about 6 minutes to the market open. So I am going to show you the trades from last week and the trades that I'm going to make today. And see what we got. All right, we got audio. There we go. That's what I want to make sure. Okay, so let's just jump in, break down what we're seeing up here. The big numbers, theta, that is my daily decay in sold premium. So I'm at a 626 theta, which is really high for me. And that probably means the volume or the implied volatility has gone up, and we've got some higher decay on something, but that's okay. So my positions I opened this one last week. This is 30-year notes. Hold on one second. So let's see, we've got ZB, /ZB is 30-year notes. So I sold a strangle on that for August 21st. I sold the 110 call and the 108 put. And as we can look at that position, that took about that. So the market cap that is pulling out of my money is 2,715 is how much spending power it's taking. And I made $45 today. And basically that picks up the weekend's theta decay. And then the profit and loss open is $39. And I have those both set to close individually. This one I traded at 15, it's at 13, set to close if it gets to, let's see, no, the call. Traded at 11, it's at 9, set to close at 6. This one I traded at 15. And remember, those are 15/64ths of $1,000. It's now between buying bid sells 13.14. And it's set to close at 7. So those will just manage themselves. Amazon. Amazon, I am kind of stuck in those positions when Amazon took a big drop. But that's okay. I'm just waiting for it to kind of degrade. And they will slowly but surely make their money. I'm not worried about it. And we can take a look at those. Those are out into August. And I bought shares. I ended up taking assignment of the shares at 255. No, I'm sorry, let's see. It's not exact. I think I ended up buying the shares instead of taking assignment on a naked call, because it shot up and I tried to protect myself. I should have just rolled it and I would have been out of that position. That was my mistake. But let's see where we're at. So I ended up buying the shares at $256.99 when I had a 260 naked call, and I picked up the shares. It shot up, and then it dropped back down, and so I rolled the call out, and I'm holding the shares. So now it's a covered call. So I've sold that. If it goes up, I'll just let those get assigned away. And then I've got two puts waiting, and as they degrade, I will let them go. Google. I've got 100 shares of Google. I sold the covered call. I'm in Google at 370. We're at 359. I sold the 370 call for 227. It's actually kind of upside down because Google's gone up at 520, but I don't care because I will let that also get called away. I also have a put credit spread, sold at the 305, bought back at the 285, so a $3,000 risk for July 31st, and that would have been a $1.55 trade there, so $155 on 3,000, and that's 25 days out. So I'm just going to let that one slowly degrade. It's currently about, well, this is a wide bid-ask spread, but the market's not open yet. Hey, here we go. See as everything tightens up when the market opens and starts to move. See my profit jump up. My theta should drop down some. Silver option closing. Let's jump down to see that. I've got 100 shares of SLV that I did get assigned. I think I'm in those at $70. It's at $55. Silver's been kind of on its way up. That's okay. QQQ, my bread and butter, my trades from last week. Let's just look at where we're at. So this was the 6th day. I traded these two last week. The 705 and the 685. Well outside the expected move. And let's see where we're at with that. That was the 8th. So it's kind of in a negative overall, but it's going to be in a positive. This one was a roll at 715, 685 and was upside down. When the market dropped, I just rolled it out a week. And let's see what I've got that set to close at for the 6th. I have that set to close if it reaches 75 cents. It's at $1.16 right now. This is 2 days out. I have that set to close on the 8th at, let's see here. I have that set to close at 30 cents. We're at $1.42. Plenty of time, no worries. And then this is the trade I took when the market was up a little bit the other day. On Thursday, I took this trade. So it is, nope, that's the 6th, 7th, 9th. I took this trade here, sorry, 9th. I took that trade on the 9th, or the trade for the 9th, the option trade for the 9th, I took on Thursday. I showed that one live. When it dropped down 700, 718, or 700, 680, it has bounced up. So it's in profit right now a little bit. But as this degrades, that profit will go up. And if you notice now that the market's open, my theta's dropped dramatically. Part of that is the open, is when the market's closed, the spreads are wider. SpaceX I took, kind of been a bread and butter trade while the volatility's high. Sold that at $3. It's now at $145, $150. So I'm up $150 on that. And I've got that set to close if it drops to $1. So as long as SpaceX stays over $150, I'll be fine. I don't care if I take assignment on that. And then SPY. So SPY is an ETF that mirrors the S&P 500. And let's see where we're at. July 9th, I took that trade. And where are we at? That one's up, so profit and loss open. They're both up quite a bit, but that's the trade from Thursday. And it's at 52 cents. Set to close if it hits 40. So another 13 cents or $13, and that will close. Market's moving up today. And so let's see what my trades are going to be today. I normally go through and see if there's anything I need to manually close or manage. And really nothing's jumping out at me. Let's look at SLV. I'm looking for trades out that are profitable at the $70 mark. There's nothing there for that. Let's look out July 31st maybe. Okay, I can make 20 cents or 20 bucks on that. I'll kind of wait. I think silver is going to bounce back up. Even if I went out to August, it'd only be 50 bucks. I kind of want it to be a little bit higher, maybe $5 higher, and I should be, if I'm, say 70 would be 65, I'd make $100 on that. That's a trade I would make. Let's look at QQQ. And I do look at charts a little bit, but mostly I base it on the numbers. We're going to look at 7 days out here. So July 13th. And I'm going to run down to normally I'd run down to the 695. That looks actually good. Volatility's dropping. It was 80, now we're at 73, but that's good. So, and then I'm going to go maybe, let's see, 40 wide, 30 wide. So 3,000 buying power, profit of 190 max. I would target probably 150 in 7 days. So that comes out to 5% in 7 days. I can go a little less. It's moving up as we go. Let me take this trade before I can't take it. Did it? I think it went through. Okay. So I'm going to set it to close. I think I got in at 180. I'm going to set it to close at 40 cents. Make it good till close. So sell to close there, buy to close there. 40 cents, make $1.50, and it releases back the money if it hits. So I'll make $150 on that trade if it closes. Looks like the market pulled back a wee bit there. That's fine. And this one, I'm going to watch this one today because we're at 715. If I need to roll it, I think we're going to degrade where I want to be just with time. You get a really steep decay curve. On a 0 day. See if there's a good chart on here. Options Alpha has let me see if they've got they have one. So when you look at theta decay, and this is why a lot of guys work this position here, but what you end up with on the 0 day is a really sharp downward move at the end of the day. And what you'll see is you kind of decrease and then you drop. So since I don't have much left, that market moves up a little bit, or as time goes, that theta is going to drop pretty quickly, and I'm going to close that trade out because it's set to close at 75 cents, since we're at $1.51. So it's not going to take much market movement up or time to get that down to where I want it to close. And let's look. Oh, I was going to do this. The other thing I want to do is on this 7 day, I do theoretically, I should use the same buying power to buy high and low to trade both sides of this. So I'm going to run out to the 10 delta, 745, and I'm going to sell a call credit spread, which is the same thing as a put credit spread, basically, except the call side. So I'm going to sell the 745. So I want it to stay below 745, and I'm only going to run out $10. So I'm risking 1,000, and I'm going to make 70. But I'm going to target to close that at 35. So 3.5% in 7 days, as long as QQQ stays below 745. That was quick fill. Immediately set that at 35 cents. And oh, here I'm going to show something. What you'll notice here is that didn't use any buying power. Because if I'm going to see if I can, okay, sell and so because it's the opposite trade of a trade I've already taken, I cannot lose both trades. And I'm already risking $3,000 on this trade here. So since this trade is already risking $3,000, 695 to 665, when I risk a trade here for 1,000, I can't lose both trades. The market can't close both above 745 and below 695 at the same time. The only way, and with defined risk. Now, theoretically, in theory, I guess, and I haven't ever run into this. In theory, if I was trading naked, it could move so hard that I would get they would basically move me into a position where I'd get the call of my account. Oh, excuse me, need more caffeine. Where basically they would look at my account and say, I get a margin call and say, oh, you owe, right? So if I was trading this and it dropped way hard and I didn't have enough money to cover it. Now, I have enough money in my account to cover but say I was trading 10 naked puts where it was $700,000, but I was using 70,000 on buying power, and it moved so hard down, I lost, get margin called, or they forcibly close that trade, and then it skyrockets back up, and they would forcibly close this trade, then I could lose. But because I'm doing limited risk, right? I'm doing a defined risk trade. My risk here is that it goes above 745, and I do like to talk about risk. I kind of am jumbling my way there, but the risk is that on July 13th, this closes above 745. I would be forced to buy the shares at whatever rate they're at and then sell them, because that's what this contract is a contract that I will sell you 100 shares of QQQ at 745. But by buying this call down here, what I've done is I've reduced my risk, because I'm forcing someone here to sell me shares at 755 if I so desire at the end, at the contract expiration. Now, the goal is that they all expire worthless or get down to 35 cents and I'm out. But what that means is if QQQ went up to 750, I would just buy the shares at whatever the price was and and then sell them at this, and I lose 500. But if QQQ went up to 770, wow, I lose this and I have to pay them the difference. Basically, I have to buy the shares at 770. I'm like, oh, but I've got this contract here I really just buy them at 7.55. I sell them at 7.45. I lose $10 a share. On 100 shares, I lose $1,000. So that is the risk of trading options, but it's why we use defined risk. But you can't lose both, right? It's not going to simultaneously close here and close in between here. So because they're holding the money out of my account on this, they're not going to hold it at both sides. I know I'm flipping back and forth a lot, probably making everyone dizzy. All right. So those are my trades right there. We also are going to do the 45-day out trade. So because August 21st is coming, let's see what options are available and if they look good and they're tight, if there's a tight spread. If it gets real wide, I'm not going to mess with it. I like this 650 at the 15 delta. Outside the expected move, I'm still trading bullish. My delta is still very positive. I do see the market as going to have pullbacks, but what we're going to see is, I think we're going to see the pullbacks down to that 700, 690 range again, and then bounce back up. And it just seems like that's been bouncing there, and I'm good with that. So in this case, I'm not going to trade the iron condor. I'm not going to trade the call side of it. First off, I feel like the call skew, there's put skew on this, puts pay better at the same delta. So 17 delta calls 507. What's a 17 delta put pay 702? Oh, there we go. My trade just closed. Let's go back and look at that. I don't think it'll show. Yep, right here it still shows that right there, but it's gone on 0 days. So that trade is out, and I closed that for profit. And you'll notice that my theta dropped because that option is no longer open. A lot of theta decay on that one today. So today we're going to trade the August 21st. And if you want to just trade slow and easy, this is a lot of movement. We're really talking a 10% dip in the NASDAQ, because we're at 722 right now and I'm trading it at 650. We're talking a $72 drop or a 10% plus drop in the NASDAQ in order to get assigned this. And I'm only trading one contract. So in this case, I'm going to go 40 wide. So 650 to 610. And so that's going to use $3,600 in buying power. And the math is it's 4,000 wide minus the max, minus your premium you're getting paid. So $324 divided by 36.76 is 8%. And it's 46 days out, so it's 6.5 weeks. 8%, 6.5 weeks. That is always. I'm target 1% a week. The 7 day stuff has higher. Some of the 7 week stuff I have has lower. But really, if I just wanted to target this and trade these, I really could just do this. Go out, 45 days and then close it at 21, and bang out that 1% a week. So there's that trade, and I set these to close automatically at, I think I'll do $1. So really I'm looking at $230, but this will probably close early. I won't be carrying this out the whole time. Now let's look at do I have a 21 day? Okay, so this is a 25-day trade, July 30th. And I've got a couple open on that. And let's just see where those are. July 31st. So I did a 665, 625 spread, which has not decayed as much as I would like. Trade price was 663, 327. And Now we're at 456, 177. So let's just do the, well, we can just do this, the math on this. On the open, I added this. I forgot I added this chart here. So 665 to 625 is 4,000. And we're up 213 on that. And of course, the other side of that trade is always going to be a loser if the first one is almost always going to be a loser if the first one's profitable. So we're down 154 on that. So that has only made $59 in, I think that's been open, I don't remember what day I opened that, on 4,000. So we've only made 1.5%. I'm going to go ahead and leave that open. It's been open 19 days and 25 days left. It's been open 18 days with 25 days left. So let's just see what that was. It was 1.4% in 18 days. So call it 3 weeks. 1.4 divided by 3. That's not right. 1.4 divided by 3. Is that right? Yeah. Oh, so 0.46% a week. A little lower than my target. So I'm going to let that go. I'm very comfortable holding that trade open. And let me just scroll through and see if there's anything else that I'm interested in trying to jump into here. NVIDIA's down a little bit. Let's take a look at NVIDIA. I've already made my trades. I am not going to be here the rest of the week. I will be helping a friend all week, so I won't be sitting at my computer. I'll be trading off my phone or on my laptop, both of which I really dislike because I got 4 big screens here to trade on and see what I'm doing. But let's look at NVIDIA. I don't have NVIDIA open. So NVIDIA is at 195. It's gotten down, and I don't work off a ton of chart stuff. But let's look at the 4-hour. So I do 15-minute for intraday. And then for longer trades, I do 4-hour or 1 day. And what we can look at is we go back to May. It had its run up in April, and really it dropped down to this price level, 195. And what we're seeing is these are the Bollinger Bands, which are going to be your historical 1 or 2 standard deviation moves out. I think I have Bollinger Band set on. Let me see if I can do that. Settings on the Bollinger. So it's this 2 standard deviation move. Your blue line in the middle is a 200 moving average. So keep in mind, I get people that tell me that I'm not, and it's a smooth moving average based on the close of the candle. I've had some people in the past were like, oh, that's not the 200 MA. It's the 200 MA based on the candle time. So we're on the 4-hour chart, and we'll see that the 200 MA is at like 210. So we're down below that. If we go to the 1-day chart, we'll notice that we're above, but we're bouncing off the 200 MA on the 1-day chart. Right? So it's based on your candles. This is TradingView for those that don't know, but this is based on your candle time. Right? When we go to the 15-minute, if I'm intraday trading, I work off the 15-minute. I no longer try and work off a 1-minute or anything like that. And your color bands are post-market, pre-market, and then the black is actual the market open. So NVIDIA is down when we're looking at the 4-hour chart. And it's bounced off this I do think in general it's going to move back up into this $200 range. Again, this is going to be a directional play. Um, and then the relative strength index, what you'll notice is when it gets down here, it doesn't mean it's bottomed out. It just means that it's oversold and usually is going to pop back up. Above that is overbought and it's going to drop. Not always. I've seen it go above 70 on an RSI and just keep going up, right? Kind of here's an example of where the RSI said it's overbought and it should drop. Well, it didn't. It just consolidated. The RSI kind of settled back down to its mid-range and then it spiked up again. So I don't do a ton with charts, but I like to look when I'm going to trade something like this. I do like to look at the history to see where we're at. We never know what is going to happen in the future. So let's take a look at NVIDIA and let's trade it out August 21st. What's that? It's got a, is that an earnings alert? August 28th. So we're going to trade before, I think that's an earnings. Before the earnings call, and we're going to look at, again, the 16 delta on this or the 10 delta, and we'll probably go 20 wide. I like this trade here. And let's see what it pays. 170, 150. So we're risking 2,000, pays 174, 6-7 weeks out. We'll call it 46 days. So 175 divided by 2,000, another 8.7. 8.7%. I do 200. Yeah, should have been 2,000. Move a zero, move a decimal point. 8% in 7 weeks. Relatively tight markets there. I always forget to look. I should look at that more often. But a 4 cent wide. If it was 50 cent wide, I wouldn't want to trade it. Let's just let's move this down to 171. Get filled. And then let's set this to close at and halfway 171, 65, 70, 85. Let's set it to close at 75 cents. A little below. Make $1 on it and then manage it if it doesn't close before. So target on this is going to be making $100 on that trade. So thanks, folks. Again, if you don't know me, if you found this channel, my name is Malachi. I am now retired. I did a lot of other stuff, but I'm now retired, and this is how I make my extra money. And the reason I'm doing this channel is to help some friends of mine that asked me to show them how I do it, but they all work different schedules and can't always get on at 9:30 in the morning. So I do go live. If you want to jump in, watch, ask questions, feel free to type questions in the chat. I've got that screen pulled up and I look at it. If you want to look at a trade, go over a trade with me. If you have any questions, comments, anything like that, and everyone's welcome. I do this because I feel like one of the things that I like to show other people and help other people get better. And I'm always learning. I won't claim to be an expert at this. And to teach is to learn. So as I go through and show other people, then they can also learn from me. And I can learn from that. So hopefully we will build a community here. I will not be on the rest of the week unless I come in the afternoons and manage something and show that. So if you like what you see, do me a favor, click the like, click the subscribe, and I will see you next Monday.